We've got an earnings alert on Rivian, the electric automaker, tumbling after its report. The conference call is underway. Let's get to Phil LeBeau with the latest. Phil.
Melissa, the shares are tumbling because this was really an unimpressive report when you look at the fourth quarter. A miss on both the top and the bottom line. The company losing $2.43 a share, more than was expected, with revenue coming in shy of expectations, coming in at $54 million. And then there's the guidance for 2022, and this is really where the stock got hit, producing 25,000 vehicles, even though they say they have the capacity this year to build 50,000.
In this video, Rivian stock plunges almost 20% today after the company reports earnings and slashes production targets for 2022. Tesla's profits are about to explode after the company makes a 200 IQ move, and Tesla has been forced to raise prices again, and demand is still insane. So let's get into the video. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. So first things first, Rivian stock today getting absolutely annihilated, down over 6% during trading hours, then falling off a cliff, down almost 13% after hours following Rivian's earnings call. Now before we go any further, I just want to play a clip from about August 2021 when I had this to say about Rivian before the company had its IPO. This video, as you guys can see on screen now, was entitled "Warning! Rivian's IPO valuation is insane." First of all, I just want to talk about Rivian's proposed $80 billion IPO valuation. Now, I would use the term insane to describe this valuation, but I don't think that's really accurate. I think a better term would probably be brain dead. No, actually, completely fucking brain dead valuation. Today, as I record this, Tesla is worth less than $800 billion, meaning that Rivian, who have done literally nothing, would be valued at about 1/10 of Tesla's current valuation. Now, either Tesla is worth $85 quadrillion today, or the stock market is completely fucking insane. Now, you guys and girls will know that I never ever give investment advice, but on the odd occasion, I do give how to not be a fucking moron advice, and this is one of those occasions. Now, I want to be really clear here. I do believe that Rivian are a legitimate company. I do believe that they have a chance of being successful, and I do believe that in theory, they could actually grow into this ludicrous valuation. All they have to do is execute the hard part. The really hard part, the really hard part. Let me give you guys some highly relevant context. Rivian's intended IPO valuation of $80 billion is more than SpaceX is worth today. You know, the company that's revolutionized rockets, that company, SpaceX. Rivian, IPO, has done nothing, delivered nothing, literally done nothing, worth more than SpaceX. Not even kidding. What the actual fuck? The valuation being assigned to this company, a potential $80 billion valuation at IPO before they've done anything, delivered a single product to any customers, is just fucking insane. What can I say? The bell curve is real. I wish Rivian all the best. I genuinely do hope that they're successful, and I also wish all the Rivian stock investors the best as well. I mean, good luck with that. It's your money, not mine. Step 1, disengage your brain if you have one in the first place. Step 2, buy the stock. Who cares what the valuation is worth? Who cares if there's no track record? Who cares about anything? Just buy the stock anyway. And step 3, hope. Oh, and then there's step 4, which is lose all your money, you fucking idiot. I don't know about you guys and girls, but I get the impression that that dickhead on that YouTube video from 9 months ago saying the Rivian valuation was absolutely fucking insane and openly mocking all the brain-dead idiots gambling on Rivian stock who didn't do any homework and think production is easy may actually have made a few valid points, especially given the fact that Rivian stock's down about 80% from its peak and still overvalued, in my opinion. Now, as somebody who clearly has absolutely no credibility whatsoever discussing EV startups and the valuations, aka the stock price, I'm going to say something you should completely disregard because obviously I'm not going to be right, I have no idea what I'm talking about, and I don't have a track record to back that up, so please ignore the following comments. 1. Every single EV startup, doesn't matter where they are located on Earth, is going to struggle to ramp to volume production. There's going to be delays, there's going to be reductions in production targets, they're going to need to raise more capital, they're going to struggle to find parts and supplies, there'll be price increases, there'll be delays, there'll be changes in specifications, there'll be broken promises and apologies. And there may be one or two founders here and there selling gigantic quantities of stock before they've done anything, which is definitely not a red flag. I mean, after all, why sleep on the factory floor when you're trying to ramp to production when you can sleep in your gigantic mansion? I mean, mansions scattered around the United States and other parts of the world, which may make you difficult to find later when your company potentially goes bankrupt. Of course, that won't happen, but just hypothetically speaking. And now a quick clip from CNBC delivering this extremely surprising news that nobody could possibly have predicted, and that is Rivian posting huge losses, missing Wall Street expectations, and dramatically reducing their production targets for this year. If only anyone could have seen this coming.
We've got an earnings alert on Rivian, the electric automaker, tumbling after its report. The conference call is underway. Let's get to Phil LeBeau with the latest. Phil.
Melissa, the shares are tumbling because this was really an unimpressive report when you look at the fourth quarter. A miss on both the top and the bottom line. The company losing $2.43 a share, more than was expected, with revenue coming in shy of expectations, coming in at $54 million. And then when you look at the numbers within the numbers, yes, the number of reservations has increased from 71,000 up to 83,000. But in terms of what they produced in the fourth quarter, it was maybe a little bit light of what they had given in previous guidance, producing just over 1,000 vehicles, 920 deliveries. And then there's the guidance for 2022. And this is really where the stock got hit, producing 25,000 vehicles, even though they say they have the capacity this year to build 50,000. Why? Supply chain constraints, specifically with semiconductors, wiring harnesses, electronics. They're talking about that right now in the call. And a loss of $4.75 billion. Here's CEO RJ Scaringe during the conference call talking about the supply chain.
The challenges our suppliers are facing vary and include company-specific production issues, COVID-related delays, and semiconductor allocations. We're working closely with any of these constrained suppliers to identify component challenges early so that we can support the supplier ramp and develop alternative solutions if needed.
The capex for this year will come in at $2.6 billion, and the company is ended the year, I should say, with $18.4 billion. Two final notes, Melissa. The first one, they will be naming a COO next week. And the second one, remember the whole pricing snafu, if you will, last week when they said, hey, we're going to raise the prices 17 to 20%. They did see cancellations. They're not giving a number, but of the people who canceled after that was announced, half of them then came back and reinstated, and they now say that the level of reservations, the pace of reservations, is the same as what it had been in the past. So they do not believe that will have a long-term impact.
They've got bigger fish to fry than this reservation snafu thing. Phil, thank you. Phil LeBeau. Dan Nathan, what's up with this stock? It came out of the gate as the hottest thing around and has just disappointed at many, many turns at this point.
Yeah, I mean, obviously a pretty immature, inexperienced management team, and they obviously have tons of competition coming online. So supply chains are one of their biggest issues. I mean, we know that Tesla made and shipped 1 million cars last year, and they're getting good at it or getting better at it than from these periods. So, and then we know that the Germans are trying to secure all the same parts and everything like that. The Detroit is trying to do that. The Chinese. So they're going to have a tough road to hoe. And I'll just say one other thing: with this stock down more than 80% from the highs post IPO, this is how bull markets end, people.
At the same time, I'm going to venture to say this. They name a COO next week. It's somebody with experience. It's somebody from Amazon. It's some name. And the stock could snap higher, Guy.
Just on a short covering bounce.
Yeah.
With no, I mean, the stock could go up 30% and still be in this downtrend that we've talked about. I mean, it made no sense at 180. Probably doesn't make a lot of sense at 50. And my sense is it will start to make valuation sense in the mid-20s. I think it's going there. But to your point, Melms, you could see a mind-ripping, mind-numbing rally on the back of that next week.
Not a whole lot to add there. This isn't a surprise to me, but clearly it is to much of the stonk market, with Rivian down about 20% cumulatively today and then after hours as a result of their earnings. Oh, and I do just want to say something too about the very harsh terminology I tend to use on this channel, brain dead, moron, these kind of things. Let me explain why I use these terms. There is method to my madness. The reason I use such harsh terminology is to cause a response in people who hear that. Let me explain what I mean by this. If you're somebody who invested in Rivian stock and some arrogant prick on YouTube suggests that you might be a brain-dead moron who doesn't know what you're doing, if you've done your homework, you're going to think that guy's a dickhead. But If you haven't done your homework, deep down, you're going to feel something. You're going to get a little bit angry, a little bit triggered, a little bit butthurt. This guy as if I've done my fucking homework. Which really means I don't know what the hell I'm doing. These are the people I'm trying to reach. The goal here is to cause such a strong reaction that somebody feels compelled to prove that I don't know what I'm talking about and how dare I call them a moron. And then they actually do the homework and realize, I see why. Oh, that means I'm an idiot. Oh, you know what? I think you might have a point. And now, time to talk Tesla. Tesla order rate is surging in the US as gas prices are turning people toward electric cars. What a surprise. Quote, Tesla is seeing its order rate surging in the US according to sources familiar with the matter, as the record gas prices are turning more people toward electric vehicles. However, it won't significantly affect its delivery since the automaker is still production constrained. In other words, Tesla's wait times are just going to increase even more. Amid the crisis in Ukraine and sanctions to put pressure on Russia to end its invasion, oil and gas prices have increased significantly. Crude oil is now over $100 per barrel, and the average gas price at the pump in the US was at $4.25 a gallon, with some regions seeing $5 a gallon. As you'd expect, some portion of the consumers feeling the pain filling up their gasoline-based vehicle might think to themselves, hang on a minute, let me look into these EVs again. Next minute they do the math. Next minute they realize the total cost of ownership is dramatically lower for an EV versus an ICE vehicle. So obviously this is going to have some impact on orders and reservations for electric vehicles. And in related matters, we learned overnight that Tesla has increased the price of some of their vehicles in the US by $1,000. Again, this suggests there's huge wait times. Tesla already has enormous margins. They're being forced to raise their prices. Some of this may have something to do with supply chain issues and challenges. It's impossible to know. But in either case, if a company is increasing the price of their vehicles and they still have multi-month wait times, this is extremely bullish news for Tesla stock investors. But wait, there's more. Let me quote this tweet from Gary Black. Tesla raised US prices of Model 3 long range and Model Y long range and Model Y performance by $1,000. In addition, buyers can speed up the delivery of a Model 3 rear-wheel drive from July to May, or a Model Y long range from December to May by adding the $12,000 full self-driving option. Now, I'm not going to lie, I don't know why the Tesla wasn't already prioritizing orders for people buying a vehicle with the software packaged. I mean, I just honestly don't know why they wouldn't be doing that anyway. And after all, if you have insane wait times of months, 3, 6, 9+ months to take delivery of a vehicle, and all customers are going to be waiting for a ridiculous amount of time, surely it makes sense from a business perspective to prioritize the higher profit, higher revenue orders, right? This is actually going to have an enormous impact on Tesla's financials. Profit margins are going to increase dramatically in the next few quarters as this change creates a wave in higher margin sales in the next few quarters. We'll do some ballpark numbers on these in a moment, but I also want to discuss the after effect of this. You might assume this is pulling a lot of demand forward for people buying FSD. That totally makes sense. But here's the thing. It seems likely that Tesla's take rates will increase as the utility and the safety, the capability of Tesla's FSD software increases, right? Seems like a fairly logical argument. Better the software is, the more value it provides, the more people are likely to buy it. This is a great tweet from Troy Teslike a few months ago, sharing FSD take rates in North America for Model 3, Model Y, and Model S and X. As far as we know, take rates globally are pretty low. US has the highest take rates of anywhere in the world. Take rates extremely high on Model S and X, but they're very low volume vehicles. Take rates looking like they're around 20% or so on average between the Model 3 and the Model Y, just very roughly. Let's do some ballpark numbers and look at the impact of this change. Let's just say, hypothetically, Tesla sells 600,000 vehicles in the US in 2022, just really rough numbers. If we assume a take rate on full self-driving of about 20%, that'd be about 120,000 vehicles with the full self-driving software package. At $12,000 per package, that's about $1.44 billion of pure profit revenue for Tesla in the US just based on vehicles sold with this package. All other things being equal, previous to the change of Tesla now prioritizing orders with full self-driving packages for delivery, this would have been fairly evenly distributed throughout the year. Clearly, if Tesla's delivering these vehicles in the next few months rather than a few quarters down the road, we're going to see a massive influx, potentially hundreds and hundreds, maybe even 500 million, $600-700 million of additional revenue in a single quarter. This obviously means there's going to be some downward pressure on margins in the later part of this year, but this may be partially or fully compensated for by the take rate and FSD increasing overall as its utility, functionality, capability, and safety also increases. If you can't read between the lines, Tesla is going to be printing an obscene amount of money in 2022, especially in the first few quarters. Obviously, the ramp up of 2 brand new factories will impact margins and profitability temporarily. Tesla is very rapidly becoming one of the world's most profitable companies. So let's recap today's video. 1. Volume production of anything, especially electric vehicles, is really hard. If only we could have known this before we started to watch EV startups one after the other fall dramatically short of their production goals, reduce their targets, raise more money, increase prices, blah fucking blah blah blah. If only we could have seen this coming. 2. Tesla is in a truly dominant position. Industry-leading margins, continuing to increase prices, prioritizing high-margin sales, and with unreasonably long wait times. While Tesla continues to crush expectations quarter after quarter after quarter after quarter, they've already climbed Mount Everest, they've already done the hard work. EV startups here, there, and everywhere are floundering, falling massively short of their targets, raising more capital, increasing prices, disappointing left, right, and center, and beginning to realize that production, as Elon Musk says, is actually hard. Who'd have thought? Let me know in the comments below, do you guys and girls think Rivian will eventually make it? Will they actually survive? Will they eventually get to around 500,000 vehicles per year by the end of the decade-ish, as they're intending? Or will they go bankrupt? Will they fall massively short of their goals? Let me know in the comments below. And don't forget to join Patreon with the card in the corner or the link at the pinned comment. You'll gain instant access to over 100 exclusive Q&A videos, loads of content, loads of topics, a bunch of perks, plus exclusive access to my up-to-date Tesla stock price targets, bear case, base case, bull case, and hyper bull case all the way out to 2031. So I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.